This is Robert Kraft, and I'm your host on SNN.Network. And joining me today as part of look, I've been having a lot of guests on because there's everybody who I speak to has such incredible opinions on what's been happening in this truly potentially once in a lifetime kind of situation that we're seeing. So without further ado, Nate Tobik, founder and CEO of Complete Bank Data, as well as oddballstocks.com. Nate, good to see you. How's the family? Everybody safe and sound?
Yeah, we're all safe sound. We're totally hunkered down, and I like these small cap stocks a lot of times with fortress balance sheets, and some of that kind of extends to real life. So only the paranoid survive. We've got our rice and everything, and been watching this for I guess like a month and a half or so, and it's like the tidal wave has finally hit here, and it's just wild.
Yeah, to say the least. So let's dig in. I mean, what are you doing right now on a daily basis? With all the, offline. I was saying like it's almost like a trader's market. Monday, Wednesdays, and Fridays, it's going to be terrible. Tuesdays and Thursdays, it's going to have a slight blip. I mean, what are you doing? What's going on?
That's yeah. So, in some ways, nothing has changed. I've worked from home for 10 years and I'm still at home. My kids are home, which is just kind of like the summer. And so still able to get stuff done. And that's not really any different. The things we're seeing now, I mean, in the market, it's crazy. I mean, so a lot of these names we followed are just they didn't move up with the bull market, and now they've moved down as people need liquidity. I mean, so things like, I've got a list of some of these things. So like Hanover Foods, it's at 18% of book value. And I mean, it's at like a 17-year, Party Resources is at a 15-year low. I mean, other things, decade lows. So this one's out your way, Queen City Investments, and they own a big ranch in the central of the state, and they're owned by, I think, farmers, merchants, and farmers bank, something like that, down in wherever, LA or Long Beach, something like
Right
that,
near.
right?
Yeah.
Yeah, and yeah, I mean these things, it's crazy, it's totally crazy. At the same time, as I kind of saw this coming, I like shorted a bunch of airlines and some hotel operators. Um, the cruise lines, that worked out well. Although, like, so my tendency is I was just talking with a friend, and we were talking about how, the tendency is you want to sell your winners and then pile into your losers. And so I shorted Royal Caribbean when it was at like 116, and then I sold out at like 70 because I was like, this is crazy. It can't fall any further. Now it's at like 20 a share. I mean, so
Wow.
it's just, you never expect that, right? It's like I sold that winner way too early. And yeah, but I'm still holding on to some things, some banks that I don't think will make it. At the same time, I've started to buy some of this stuff that's at these crazy lows. There's some banks out there I've been starting to kind of dip my toe into the pool with. And I don't know. I've heard from some people that in banking, business is off the hook with people trying to refinance, right? So it's like, I talked to one person, they're like, this is just, we need to hire more mortgage processors.
Right.
At the same time, it's everyone is trying to refinance their mortgage because it's cheap. So you get a big boost right there. At the same time, look, if rates are zero and you're taking money on deposit at zero and then you're lending it back out at 1 or 2%, that's not a great business. And so I don't know long term how that actually works out. I I have the opinion, I'm not sure that the low rates are with us forever. I think this is more of a situational thing, and I think it might, there's a scenario where we've poured so much money onto this thing, and now everyone's going to be getting the helicopter money, that when the crisis does disappear, and if that's 6 months, 18 months, and everyone comes out of their cave, it's like, let's start to spend, let's start to, and now you have all this money, and I think in that situation rates are going to have to rise pretty quickly to kind of counteract what's going on with that.
I mean, we'll see. I mean, I have a quick comment to that before I get to it, just real quick. For those who don't follow oddballstocks.com, just quick disclosure for the first three companies you mentioned, Hanover, the other two.
Yeah, Queen City and the Farmers Bank. Yeah, so I do own those. I own. So I mean, I'm going to mention a ton of tickers. You might as well consider that I own some of these, and a lot of them I just own a single share.
Okay.
And it's so
all right, we'll go with that. That's
fine. Yeah.
All right. Well, real quick. Okay. So to follow up there, I mean, look, I wanted to ask you this question. That was one of the main reason I had the main reason I had you on is, Fed interest rate now going to zero. But look, we're in a very weird time frame, and I'm not just saying because of coronavirus, but with all these different actions that the federal government is taking. Let's zone in on that alone, because
sure,
usually in times like these, we're operating from, I mean, we'd hope, like back in 2001 when 9/11 happened, is that we were operating in a surplus and we were able to really deploy all the different resources that we had, and it wouldn't drive up our crazy debt that we have. Now here we are where, look, and this is, I'm not saying any kind of political affiliations, anything like that, but look, we got a president that's out there tweeting on a daily basis. Even before this happened, Powell, cut the rates more. Like, let's compete with the world, and
right,
without maybe even realizing that that's just going to continue to really push our debt ceiling up higher and higher, and especially a guy who wants to get reelected this year. I mean, so, to think that rates might go up, I don't know. I mean,
I think they could. And I think so if this is, okay, so I guess a couple scenarios, right?
Right.
First scenario is, let's just say this is the 3-month thing. The summer comes, the virus is gone, and everyone they come out of their bunker. At that point, we have now thrown so many resources into this. Demand's going to come back. There's a lot of businesses that are going to have balance sheet problems, right?
Right.
But at the same time, they're still going to be in business in a couple months, and this infrastructure still exists. And at that point, when you've given everyone the helicopter money, when you've poured all sorts of fuel onto the fire, I think this could just absolutely explode. And so I think in that case, rates would have to go up. Let's say the 6, 9 month, 12, 18 month till we get a vaccine type thing, right? In that case, I mean, that's more like depression type situation. And I mean, the Fed's trying to do everything they can, except the problem is they're trying to solve a humanitarian crisis with tools for a fiscal crisis. And you can't do that. I mean, they can't manufacture drugs. And until then, it's like, if someone came out and said, there's zero chance you would get a virus if you went and stayed at a hotel tonight, I would not stay in a hotel. It just wouldn't happen. And that lingers in people's minds. And just like, after the last crash, for a couple years after in the Rust Belt, people were still talking about how tough it was, how hard times were, and we'd recovered. And the memory lingers for so long. And I think the same thing is going to happen here. And so in that sort of the depression, crash, big recession thing, I don't think things come back. And at that point, you could pour as much fuel as you want onto a fire that doesn't exist and nothing happens. In terms of like the national debt and all those things, it's, that's a problem. Giving people money, I mean, that's crazy inflationary. I was joking with my wife. It's like, well, why don't they just give everyone $10,000 or $100,000 checks? Because then, that would be great. The problem is like, where do you spend it? Yeah. Every business here is totally closed. You can't, you're not supposed to really go anywhere. So what do I do with it? Who do I give that money to? It's worthless. It's weird.
Yeah. And it's almost and there's almost a fear. I mean, this is just maybe a projection of like, okay, you get the money and then they go and invest in the stock market. They make the wrong bet and poof, all that it's gone. So it's like, it's literally just like, here's your 1,000 or whatever money it is, do what you will with it. And yet I don't know if that, I think it will definitely help because I mean, look, I don't think most people are going to go and and invested in the stock market. Maybe you and me or others in our who are colleagues of ours, because we kind of more or less know what we're doing. But at the same time, like it's just it's scary. I mean, look, one of the things that I think you really hit the nail on the head, that they're trying to solve a humanitarian crisis with fiscal policies. But at the end of
Yeah.
the day, it seems like they're just shooting every shot they got. I mean, look, it's the federal government.
They did. I think they already.
Yeah.
So the next step is, really all they have left is they could buy bonds, and then they would have to get Congress to change the law to buy stocks directly. But I guess if they were able to get enough buy-in, that would, they could potentially do that. I think what's interesting though too is how the narrative is shifting, right? So the market is down. What are we down now? 30 something percent, right? And but everyone's really worried, rightfully so, about when a business just closes, what are the workers doing? Most people haven't planned in the U.S., which that's not prudent. But at the same time, I have compassion and I understand, you didn't ever expect some disease to just pop out of nowhere. Anyway, so, sure, I get it. We need to kind of, tide people over because, realistically, if you don't do that, you could have people in the streets and then suddenly that becomes, a much bigger problem. And that's how these things spiral. And so I understand that. It's I just don't know what else they could really do. I mean, so say they start buying the market and they end up buying 10 or 20% of the market. I mean, is that going to do much? Japan has tried that and it hasn't solved anything. So I don't know. The real thing is people need to gain confidence and get back to their daily lives and be confident that they're not going to go to the grocery store and get infected and then be stuck at home for 2 weeks or a month or whatever it is.
Yeah, no, look, man, every day, we're also hunkered down. And, I went last week on that Thursday and Friday and was very strategic about my grocery store entrance time and, which ones I was going to go to. Cause I thought, okay, well, these ones, I think a lot more people are going to go to, you start playing those games with yourself to be like, okay, how do we strategically do this so that, there's less people and all that kind of stuff.
Yeah. I mean, you have to think that everyone you interact with is probably infected and anything you touch is probably infected. And then that's how you have to live. And it's terrible. It's totally terrible.
I went on a run yesterday. I literally was seeing there was other people walking, I saw them as obstacles, they'd be walking on the sidewalk and I would just, do a nice round curve, right into the middle of the street just to, I mean, look, it's the world we live in right now. I mean, I also have to ask then, okay, so in times like these, you've seen a couple cycles, what are some of how does your criteria change now? When you see stuff like this happen, what are some of the things that you look for?
Sure. So, a couple of things. I really believe strongly in these real world sentiment indicators. And so, for example, this is just so I like to look at a company. If I'm looking at a company and I'm able to go there or something, I'll look at the cars in the parking lot because that is an indicator of what they pay people. So typically people buy the nicest car they can for what they're paid. And so if you look around and it's a parking lot full of Kias, then they're paying lower than if it's a parking lot full of BMWs. And it's not a statement. It's just that's what it is. And this holds true. And similarly, and often you could tell a lot about the CEO by the car they're driving. And, I worked at one public company and there was a row of Porsches parked in the back of the lot for the executives. And then everyone else drove just a total mid-level car. And it told you everything you needed to know. Right. And so these real world sentiment things. I'm still having people tell me who are not into the stock market or who are into the stock market, who are not in finance. Oh, buy the dip. I'm looking at all these names. This seems like a really good thing. It doesn't seem like the bottom's in yet, right? So my real world indicator was back in 2008, there was two friends. One of my is my buddy's wife and another woman I knew who I didn't even think they knew the stock market existed. And they said, "Wow, what's going on with the stock market? This is really crazy." And I thought, geez, if they're tuned into this it's now permeated every square inch of everything. And you know what? They were somewhat close to the low. And it was a, kind of a good indicator. And so similarly, it's like there's people who I talk to, I'm friends with, there's been no talk of anything. And when they finally start to bring these things up, you say, okay, this is low. And so I'm looking for companies that have good balance sheets. Good balance sheets always get you through a storm. Companies that were not overvalued going into this, so I was looking at Walmart today, and because someone told me, they said, "Oh man, they're going to have this boom with everyone buying stuff once it all opens up." Okay, that's fine. Walmart's up. They have not crashed at all. They continue to appreciate, and they're still at something like 30 times sales or 30 times earnings. It's not cheap, right? And so you say you have to wait 30 years to earn back your money on this. I mean, what if people are spending less coming out of this? I don't know. That doesn't make sense, right? So some of these good companies, or a company that seems like it makes a lot of sense, they're still high. You get things like Boeing, which is totally getting slaughtered. And I've seen a lot of chatter like now's the time to buy. I think the government will end up owning them, so it's probably not a time to buy. There's a lot of natural resource names, even oil stocks. If you look at like ExxonMobil, they're back to where they were in the 90s, but they're still not cheap, especially at the price of, where oil is per barrel. It's like, this just doesn't, it still is overvalued. So, we're down all this and there aren't bargains everywhere. And that's kind of the indicator. Now, in the banking world, there are banks, there's a local bank here, FNB, that's the ticker, I own some. It's at 40% a book. And they do residential and commercial loans. And the commercial loans are not to small businesses. If you needed a $100,000 loan, you're not going to get it from them. If you needed a $10 million loan, they could work something out. I would say just kind of, a back of the envelope, the person with the $10 million loan is probably more likely to be in business than the person with the $100,000 loan. Just kind of it's like the type of business, if you could get it up and running really quickly, it probably doesn't have a ton of staying power, versus someone who they have a substantial plant and an investment. They might be the only ones, or, one of a few that could actually conduct their business. So, at 40% a book, they could have some significant losses, which they probably will, but you're probably not going to lose money there. Now, there's other banks that I think are going to die by 1,000 cuts, and that's, they're concentrated in certain areas, and especially with a lot of hospitality. Hospitality is such an easy industry to lend to. Everyone wants to build hotels along the highway. That's really tough to figure out. You can't really redo anything with the building. And if demand is down for hotels, that loan is not getting paid.
Right. Well, real quick, I know you said already, but Walmart, Boeing, and I forgot the other.
I don't own Walmart or Boeing.
Okay.
Yeah.
Okay, cool.
Yeah.
I think there was one more. I can't remember which one. Shoot. Just to kind of close out here, what would you then say for the next few months to both seasoned and new investors? What I'm not asking you to be the oracle or anything like that, but what are you seeing then for the next couple months here?
Yeah, so I would look for the Fortress balance sheet company. And the perfect example of this is a lot of these Japanese companies that people have made fun of for years. They have excess cash, and they could survive with no revenue for 6 months or a year and a half. And instead, a lot of the companies that have compounded so fast, they were just flying on a wire. And so I would say, here's how I look at things is I always hope for the best, but I am trying to evaluate the worst. And so you say, if let's say it's 6 or 9 months, if there was zero revenue for 6 or 9 months, what would happen? What would end up to this business? Would they be out of business? Would they be bankrupt? If that's true, it's probably not safe, right? Now, if you buy something like that and you say they could handle a year of no revenue, they're going to be totally fine. They could ramp things back up in a year. Now, if that scenario doesn't happen, it's going to shoot up like a rocket because it was able to survive and it has, the worst case was priced in. So, I mean, that's how I looked at things after the last crisis. I haven't really changed. I do like the idea of momentum, and this is something. So, like right now, the momentum is going straight down, and you have to appreciate that is the factor, and you have to ride with that. And then at some point, the momentum's going to change, and this is just like we saw earlier this year with the all-time highs. Even once it gets overvalued, it just continues to float up because that's what the momentum is doing. And so with some of these stocks, if you find something that it's just been unfairly punished, it has staying power, the momentum is probably going to continue further than you think on the downside. So I don't buy all at once. It's like buy in pieces. Commissions are almost nothing now. It doesn't matter. The safe bet is to always buy the market leaders that have been punished. And so, Apple, sure, people aren't going to buy iPhones for a couple months, but, will Apple be around at some point? Yeah, they probably will. I don't own any Apple. But, that strategy of kind of buying, if you look at all the sector indexes and you picked the top one or two companies in each index, those are probably the survivors. And some of it just could be because of the brand. The brand value holds and their place in the market holds. So, always evaluate the balance sheet, though, because you don't want the over-levered cyclical that's at the top of the index. But, yeah, that would be my advice.
For sure. Sorry, you cut out a little bit there, but I think you said...
I lost you there.
Yeah, I think you said, and that's my advice, right?
Yeah,
Okay,
that's
cool.
my advice.
All right. And by the way, I did just remember the one company you mentioned, Exxon.
I don't own any Exxon either, no.
Perfect. All right, man. Well, with that, where can my audience go and find more information about Oddball Stocks and complete bank data?
Yep. So you could find out, you could read the work at oddballstocks.com. We also have Oddball Stocks Newsletter.com, which is a subscription service. And then if you are a bank looking for growth, check out completebankdata.com.
Nate, always a pleasure, man. Thank you very much for joining me, and stay safe. And, I guess just continue operations as usual, right? I mean, this is the home office.
So far, so good. Yep. Well, thanks for having me on. I appreciate it.
All right. Thanks, dude. Have a good one.